Hello, everyone. My name is Tasha Poinsett with the Healing Advocacy Fund. Really happy to be able to host this call today on the important topic of accounting and tax structures in the state-regulated psilocybin programs. So hopefully most folks on this call are pretty familiar with what we are referencing when we say state legal and importantly federally illegal psilocybin therapy programs. But just to be really clear, we are talking about programs where adults 21 plus can access psilocybin therapy with support from a state licensed facilitator at state licensed service centers in Oregon, healing centers in Colorado, and potentially looking ahead to future states. There may be different iterations of the location types that are applicable, but really a focus primarily on Colorado and Oregon today, with screening, preparation, support during the psychedelic experience, and integration afterwards. With the Healing Advocacy Fund, our mission as a nonprofit is to support these state-regulated models to be viable, accessible, to be responsibly implemented, and fundamentally to support adults to access healing through this new modality. Across Colorado and Oregon, there are a few differences in terms of the structure of the program. So Colorado overall has a somewhat more medically integrated program, which allows out the gate for licensed healthcare providers to become licensed as facilitators and provide facilitated psychedelic care at their existing location, whether that be a therapy office, a mental health or psychiatric clinic. Oregon, it just recently changed their law to allow a greater level of integration. So licensed healthcare providers can integrate certain licensed healthcare providers can integrate that provision of healthcare with psilocybin facilitation during the preparation and the integration phase, though not the administration or the supervised psychedelic experience phase. And there's a number of other differences across the two states. If anyone on this call is not so familiar with these models yet, the Healing Advocacy Fund does have a number of past webinars where we get much more into the details of the different structures across the two states, how these models are set up. So if you want to check out those past webinars, I encourage you to visit our website at healingadvocacyfund.org. Under the resources tab, there is now a webinar archive, and so you can do a much deeper dive into questions around dual licensure, which is kind of what I'm touching on, integration of healthcare with psilocybin facilitation, as well as thinking about referrals into the state programs and just the basics of what are the training requirements, how are these programs set up. For today, we really are going to keep it pretty focused on this question of accounting structures and how do we handle the money in these state-regulated programs. So before I hand it over to our moderator and panelists, I do want to point out that the Q&A function is enabled for this webinar. So please do feel free to drop questions in the chat as we go through. A lot of this is very complex, although I know that they're going to try to keep it as kind of direct and straightforward as possible. But for instance, if you don't understand a term or something isn't quite clear, feel free to drop quick clarifying questions. And then we are going to also reserve time for Q&A at the end that will be more focused on the content that's coming up during this conversation. So with that, thanks again for being here. And I'm going to hand it over to our moderator, Sakar Pudasaini, who is a CPA and who's going to be leading this conversation with Jordan and Justin. So I'll hand it to you, Sakar.
Thank you so much. Just keeping an eye on time, just housekeeping before we get started. So maybe around 12:45, we switch over to participant questions. Is that roughly what we're thinking?
Sounds good to me.
Yeah. Okay, excellent. Well, thanks to the Healing Advocacy Fund for putting this together, and thanks to Jordan Cornelius and Justin Botillier. Yeah. Maybe I got it right. For joining me. Both of them have are CPAs running practices that have engaged quite a bit with 280E in the cannabis space. I'll give them a moment to introduce themselves in a minute. I just wanted to sort of outline for everyone listening how we might go about today's conversation. I was thinking we start with some broad questions about that, every business owner should know because you are a business owner with additional complexities, right? And then we can jump a little bit into what is 280E and what the complexities of it are. But before we get started, Jordan, Justin, could you take maybe a minute and just tell everyone a little bit about your background and experiences? Maybe we can start with Jordan and then switch over to Justin.
Oh, sure. Well, first off, thank you to the HAF for having us speak today. I appreciate that. My name is Jordan Cornelius. I've been a CPA for about 25 years. I'm a managing partner at Cornelius CPAs based out of Denver, Colorado. Really, for the last 14 or 15 years, we've worked predominantly in the cannabis industry. Our client demographic is probably in excess of 90% for both cannabis, psilocybin clients, predominantly cannabis. We do work in other industries. More or less for every client that we work with, we provide income tax services. I spend a lot of time in representation work in front of the IRS, city, county, municipalities. And over the years, we've worked on tax strategies, predominantly focused on 280E. Some of those strategies have been great. Some of those have not been that great. But at the end of the day, we have a tremendous amount of experience. So I'll turn it over to Justin.
Yeah, thank you. Justin Botillier, CEO of Calyx CPA. Similar to Jordan, about 20 years self-employed. And then in 2016, I sold my general practice and went all into the cannabis industry. 95% of our business is in cannabis, so therefore we've had to deal with 280E for quite a while and mitigating, tax on phantom income and whatnot. We are based in Southern Oregon, so I'm also a big enthusiast of psilocybin, having had my first experience when I was 17, and it changing my life. I've been following it very closely for years, and so when I got the opportunity to work with some of the first service centers in Oregon, I jumped at the chance and have established a small portfolio of businesses in the psychedelic industry.
Excellent. Thank you both for being here again and for, being willing to share what you've learned over these last 15, 20 years of practice. A quick question, more general, before we jump into 280E for Justin. Justin, I know that your firm also does provide some bookkeeping services, right? But generally as a business owner, and maybe more particularly as a business owner that in a sector that might come under scrutiny, right? What is your general advice on record keeping, right? Because sometimes we jump into all these complexities, but these are businesses, right? What sort of record keeping should they be thinking about? What sort of basic financial hygiene should anyone in the sort of psilocybin natural medicine space be contemplating?
Yeah, I mean, as far as record keeping and the use of double entry accounting systems and whatnot, I would highly recommend it for any business. It doesn't make a difference if you're in a trafficking in a Schedule I substance or you're just doing some service-based facilitation or whatnot, in which you're not necessarily trafficking. The record keeping is the same. I would recommend a double entry accounting system. I would recommend like QuickBooks. Sorry, sorry for the jargon. QuickBooks Online, something like that. If you're a small sole proprietorship, you don't necessarily need to do bookkeeping all the time. You can do it once a year or whatnot, but you definitely want to keep track of your records and of course, especially if you're a service center or a healing center, you do want to have regular updates to that bookkeeping. There's receipt capture software or whatnot. You could use that to automatically import into your system. There's ways to go about it, but it doesn't make a difference if you are trafficking or not trafficking. You should have those records.
So the basics, right? Separate your business and your personal accounts, capture and organize
There
all
we
your
go.
feeds, right?
Yeah. And definitely don't commingle your personal and your business accounts. You definitely want to have a
Right.
business account or a credit card that's only used for those purposes.
Excellent. Yeah, I think that's just good advice to remind everybody of to get started. Jordan, I have a slightly different question for you as a starting one. which is that sometimes when people reach out, they're not exactly sure what's the right time to reach out to an accountant or accounting firm. Is it after everything is set up? Is it once you have your first client? And then also there's sometimes confusion between what is my attorney doing for me versus what is my accountant CPA doing for me, right? Could you help people understand, if they want to reach out to an accountant, what is the right time to do it and how should they do it, and sort of where that difference between the two professional services might be?
Sure, yeah. I mean, my opinion may be biased, but I always recommend that groups that are starting down the road, especially in highly regulated industries, to engage a CPA that has experience right out of the gates. What we can expect from most of the law groups that we work with, in both industries is really they specialize in setting up operating agreements, determining the arrangement between potential shareholders, members, partners. They also do a lot of work on the licensing, letting everyone know what the bright line tests are for what you can do and you cannot do within, the regulatory guidelines, where we see expectation gaps develop. And some of these expectation gaps can be solved months after a business has been operational, but it's typically on the organizational structure, whether we're in an incorporated entity, a pass-through entity. Some law firms do have experience in that, but we find a lot of law firms don't, they kind of skip over that. Oh, you're a limited liability company. No one really sits down and makes determinations on, how you're going to be taxed, months later. Would have been more efficient to be a C Corp, an S Corp, a partnership. So those are important aspects as groups are sitting down, whether it's multi-member groups, whether it's single-member groups, as they're working with their attorney firms, they should also be asking whether the law firm has some type of partnership with a CPA firm to work through the organizational structure. In terms of differences between CPAs adding value at that stage and attorneys, attorneys are really good with the legalese. I wouldn't jump into that world and pretend that I could do that, although sometimes CPAs do. But where we add a lot of value is really sitting down and saying, are these viable businesses? We get a lot of groups that get excited when cannabis came on, psilocybin came on. One of the sayings we used to have, all that glitters is not green. And what we found is a lot of business ideas could have been fleshed out or vetted before people spent 6-7 figures. And that's why I think it's important as new groups, whether you're in Colorado, Oregon, start to flesh these ideas out, start talking with your CPA about financial viability, organizational structure, tax structure, and potentially run pro formas to determine whether or not businesses are fully capitalized before they spend, 100,000 and they actually maybe need 400,000 to get operational. A lot of people have lost money that way. I'll turn it back over to you.
Right. So getting the financials right, but also getting the tax implications of the organization correct. One common thing I sometimes see, particularly in partnerships or pass-through entities, is that someone is providing the capital and someone else is providing the service, but it's set up such that the person providing the service would have to actually claim a big income, right? And that's the sort of thing that I think CPAs can sometimes spot early on. Yeah.
Right.
Yeah.
Expectation gaps for sure.
Yeah.
Being undercapitalized going into a small venture will guarantee a loss before you even open the doors. So, but we won't jump into that right now.
Great. All right. So this is a question for both of you. Let's get to the elephant in the room, as it were, right? What is this 280 thing? And, if you are engaged in the natural medicine space, which for now is psilocybin, but might be growing in Colorado shortly. Um, what is this 280 thing? How do you explain it to people that walk in the door? Like, take us sort of back to the basics. What is 280? How does it impact businesses in this space? And maybe we can go Jordan first and then Justin.
Sure. So 280E at the simplest form is one sentence out of 40,000 pages of, US code, Treasury regs, IRCs. And really what it says is if you're trafficking in a controlled substance, whether you're an enterprise, for-profit, not-for-profit, you are no longer allowed business deductions or credits. That, at the simplest term, is where it's at. A couple more words than that. And for years, I mean, it's probably not the right forum to go into the history of 280, but for years it was designed for really illegal traffickers, narcotic trafficking, and there's some reasons why that law was passed. Probably not the right forum to go into the history of that. And when we fast forward into the late 1990s, medical marijuana ordinances started to come around. Initially, it was thought that 280 did not apply to legal state programs across the country. Most of the shops that opened up in the early days were not profitable. They weren't generating, 7, 8 figures on the top line, generating 6, 7 figures on the bottom line. They were really co-op models, not-for-profits. However, once we kind of springboarded into the early 2000s, especially in Northern California, around the Bay Area, we started to see some of these medical marijuana operations start to become very successful. They had similar terminology as what we're using today for the psilocybin industry, healing centers, therapy centers. And the Internal Revenue Service started to take notice. These entities were structured as not-for-profits, ultimately taxed, at the incorporated level at the federal government. And the Internal Revenue Service challenged the ability of whether or not 280E, the simple sentence, actually applied to state licensed facilities. And what we found in those days is the federal tax court did agree that the U.S. Code did apply to those state licensed facilities. And there were multiple federal tax court cases, staging out between 2006 all the way up to 2018 that suggested that 280 does apply to any trafficker, which in terms of the demographics of the industry that we can think of, retailers, distributors, cultivators, and processors, manufacturers. So it applied to all demographics. If you were producing any substance that was on a Schedule 1 or 2, you could assume, at least the internal or the federal government's view is that you were not entitled to a deduction or credit. Maybe I'll pause and let Justin talk, and maybe we can work with each other.
Yeah. Yeah, Justin, take us back to the basics. What is 280 at its heart?
Well, I mean, Jordan did a great job. I appreciate that background. I mean, yeah, you're just not allowed to take your SG&A, your overhead costs. And especially for dispensaries in the cannabis industry, it was extremely devastating to them. Like for every $100 that they made, they had to pay like $90 in tax on phantom income, and sometimes they had zero income, and then they would have to pay tax. So for that industry, it's for the cannabis industry, it's horrible, and it's been our calling card for like the last 10 years. Same with Jordan. It definitely has taken a specialist to be able to make sure that those businesses are able to stay in business. The psychedelic industry I think is a little bit different. It's going to be different. It's not a commodity-based business similar to cannabis, but it's more of like service-based businesses where the economy and the market around it is based on the services of the providers and whatnot. So it's a little different, but in the end, 280E's rule is still the same, that you can't take your overhead costs. So at face value, if for a lot of people who don't specialize in this, they're going to look at 280E. Accountants that don't know the methods to mitigate 280E might just say, well, you can't deduct your rent, you can't deduct your payroll, you can't deduct your license fees, you can't deduct your A, B, and C. So that's I guess 280E at face value. You can deduct the cost of the mushrooms that you're purchasing, and that's it.
Right.
So at face value.
Yeah, is this a fair analogy? So let's say I had a bakery and I sold cookies, right?
Mhm.
And next door to me is someone that sells cookies with some kind of controlled substance in it, right? Be it cannabis or psilocybin or whatever it is, right? So in my bakery, when I pay tax, if I earned 100 and the cost of my cookies were 20, then and the cost of my rent was another 20, and the cost of my labor was another 20, I would be paying tax literally on $40, right? Because that money that has been spent in the business and I don't have to pay tax on it. But in its simplest form, if I was selling the cookies with the controlled substance in it, then I could only deduct the $20 it cost me to make the cookies. I
I
couldn't
would say
deduct.
that you bought the cookies for resale.
Okay, right.
That's a better analogy.
Right. Okay.
Yeah.
Yeah. So I'm not the baker. I
Yeah,
bought
you're
the
not the
cookies
baker.
from
That's
someone and
different.
I'm
Those are
reselling
different
them. Okay.
businesses.
Right. Right. Because if I am the baker, a different set of rules apply.
Yeah,
Okay.
yeah.
But at the heart of it, what happens with 280E is that you can't claim a lot of business expenses, and so your tax bill is significantly higher than other businesses. Okay.
Yeah, you would
Yeah.
only get to deduct the cost, the amount that you purchased the cookies for, and then your
Right.
rent and your employees and all that rest of that stuff would not be deductible.
Yeah.
Correct.
You could see how that's devastating if you're a first-year business and
Right.
you've invested all this money and you should have a $100,000 loss, say, but instead you pay tax on $100,000.
Right.
You know, that's the
Right.
reality of 280E. It's somewhat
Right.
awful. I don't
Okay.
want to be too grim though, because there's solutions. There's a light at the end of the tunnel, and
Right.
Jordan and I can attest to that.
Right, of course. So we're getting there, right? So I think we're just trying to
Yeah.
establish, well, what is this thing? Why is it a problem? Why
Yeah.
do we even need to worry about it, right?
Yeah.
Right. And one thing before we probably move on that I think is relevant is, there's been a lot of working ideas. We always tell new taxpayer or new clients that we have come in that are in these regulated industries is, there's kind of this working idea. Okay, this is what 280 is. Okay, then the next step is how do we solve it? Is this 280 thing, is it really just kind of undefined? Nobody really does. One thing that's important for everyone to understand is, does it apply? Does it not apply? Is it that, our group and most likely Justin's group and a few other groups around the country have been part of this, is that this has been down and litigated, last count as of a couple of years ago, almost 26 different times in the 9th Circuit, the 10th Circuit. Predominantly, most of those cases reside there. And what we have to understand is we can't ignore it if we're in a regulated industry. The Internal Revenue Service Department of Treasury, by last count, is 26-0, meaning they won every case against every operator when it comes to it. Mainly, there's a lot of circumstances, but mainly does 280 apply? Every court, lower and appellate court, has said it does apply. And then the constitutional challenges, the Eighth Amendment, we were part of an Eighth Amendment challenge, a 13th Amendment challenge. Those things have been shot down. So it's important to understand that there is, tax strategy is not a wide open field like it was back in 2010. Today we're on a path, and you really have to ask yourself as an operator, it probably springboards into what we're getting at, is, are we going to be on that path, or are we not going to be on the path? Earlier, you had mentioned risk profile. And if we're on the path, it looks like, exactly what we talked about, the analogy you used. It's hard to stay in business. If we're off the path, our risk profile gets a little bit bigger, and we start to look for alternative arguments in the event we are challenged. Does that make sense? And
Yes.
the other part that I think is relevant is, not all groups are audited. I think you have to assume you'll be audited, but because you're in a regulated industry, doesn't necessarily mean that the day you go down and get licensed in the state of Colorado, state of Oregon, that the Internal Revenue Service starts tracking you. Our exam rates over several hundred clients is still probably less than 5%. So I'll pause and turn it back over.
Yeah. So let's take a minute and think about the different kinds of, actors or businesses, however we want to think of them, that exist in the natural medicine space, right? So we said, okay, they're growers, right? These are the people actually producing it. In my earlier analogy, these would probably be the bakers or the people who actually grew it and made the thing. Then they are retailers. That's the term we'll use, but this would probably apply to healing centers in our space. And then they're facilitators, right? Who are the people providing the actual therapeutic service, right? And then if I'm missing someone else, you guys can jump in. But then there are also ancillary businesses, right? So there's like people providing software, or people like us providing services. So Does 280 apply to, let's start with the people more at the edge. Does 280 apply to, say, a software provider to these services?
No.
No, you don't think
No.
so?
Short answer, no.
Yeah.
Okay.
The only thing I would add to that, just at the exam level, sometimes the related party affiliation rules can pull in what we would traditionally consider non-regulated businesses. So if I have a cannabis business and I set up a supply company, software company, and I'm the sole owner of both businesses, and predominantly we end up with interfund relationships.
Right.
There was a Ninth Circuit case that brought this up a number of years ago. Potentially, if my only customer is my regulated business, whether it's cannabis or psilocybin, those things can be meshed together and 280E can be applied. But that's really the only exception
Right.
to your
We've seen
comment.
that with some real estate,
Yeah.
I think, right? Where people own real estate. Yeah. Okay.
That's something that I know that people will try, and attorneys that may not have been privy to the precedents, the court precedents, will try some sort of management, personnel, licensing company strategy to segregate. It's a little different if we're talking facilitation versus mushroom sales. That's different. I'm not talking about that, but that management structure where you've got different entities serving different purposes in order to be able to take deductions that the service center cannot take, that's a bad strategy.
Correct.
It's been the IRS is very privy to that, and they exactly what Jordan said. They'll just call it all one business, and it could even actually result in much worse tax ramifications if you have that structure and it is really just in the service of trafficking. So beware of those strategies. But
Yeah.
I'm not saying that a bifurcation of service and mushroom sale is the same. That's different. That's an approach that's being taken in this industry specifically, and that's different. I'm not saying, I'm just talking about like other ancillary businesses that are in use specifically for being able to mitigate 280E or circumvent 280E.
So if your intention is to circumvent 280E and you're creating some kind of structure, that is something that we've seen. I think this goes back to Jordan's earlier point. It's no longer a wide open field. We have, I think you said 26 or more actions that tell us what is no longer permitted, right? And this is one of the things we know is not permitted. But if you are a regular software provider or if you're a regular supplier of drinking
If you're an
water,
accountant that
then
specializes in
right,
this,
right.
you're
Then
okay.
it likely doesn't apply to you. Okay, so let's take a step further in. If I'm a facilitator, right? So uh, people are on their journeys. I'm sitting with them. I'm, licensed by the state of Oregon or Colorado, and I get paid for that service. Does 280 apply to me?
I'll let Jordan start with that one because I have
Oh.
an opinion, but
Right. We had talked a little bit before, but so the question is are we actually administering psilocybin as part of the therapy service, or are we allowing patients to come in with their own psilocybin and we're providing an experience? So I think that those things are different, where we can have one facilitator, definitely within the confines of state law, facilitator that you come in, you're evaluated, and we decide that we're going to, dose with psilocybin, and we're going to provide you an area to, have that experience, a safe environment and what have you. So when I think of, really what we're doing is we're providing a service and we're also administering psilocybin, Schedule I substance, which would suggest that 280 does apply at some aspect to our business. Where I think it's important is really kind of cost segregation and really the demographics of what we're doing, because it would be really easy to say the only thing that we're providing is a service, therefore 280E doesn't apply to us. But what our financials would show at the end of the year is that potentially, we have $1 million of revenue, but we purchased some type of form of psilocybin, maybe 50% margin, 500,000 of psilocybin. So now we're sitting down and taking a look at our expenses. And I think there's two ways to go about it. One, we sit down and categorize the cost of our services along with the cost of psilocybin as really a return of capital, cost of goods sold, inventoriable cost to get us where we want to be. Or the second manner is we start to bifurcate our services. One business, and we have two departments. One is for the wellness that we're providing, which would not be subject to 280E. We present those on page 1 of the return along, not to get into really the weeds, the 1125 for the cost of those services, and one for, you know, the department that would be subject to 280E, which would most likely be minimal. We purchased psilocybin, we administered it, and we received revenue. Therefore, we wouldn't see a large impact to 280E for a facilitator. But, you know, back to a point that was made at the beginning, the financial reporting is absolutely the starting point. This isn't a CPA in the 11th hour, the day before the tax return is doing Hail Mary journal entries or reclassifications to get us there. If we want to live in an environment to start to mitigate 280E, the focus has to be on the daily financial reporting and how we account for those costs and making sure that the categorization is correct. And what we saw in the early days of the cannabis industry, what we see today with psilocybin groups starting up, is there's not a lot of focus on the financial statements or these considerations that we're discussing. The focus is really on, we need to get revenue in the door. We need to start generating a return on investment. We'll figure out the financials in, you know, 13, 18 months down the road. So when we think of facilitators, I believe that they are subject to 280E. The real question is how big of a bite is that going to take? And really, how big of a bite is going to be completely contingent on the financial experience and the financial statements.
Yeah. Let me, I see a couple of questions in the Q&A about this facilitator thing. So I think, Jordan, what you just answered really well is how healing centers should think about it, because they are both purchasing the psilocybin and then, you know, they're also dispensing it, right? But let's say I'm independent contractor facilitator and a healing center who purchases the psilocybin calls me in, right, to sit with and provide my services to a client, and they dispense the medication, right? So now, you know, am I strongly in the clear in that case? Or do I still need to think about, like, is it still a gray area?
Maybe over to Justin.
Justin?
Yeah, I
Okay.
mean, my opinion is that's administering, not trafficking. It's a little bit different. You're not ever taking possession of the psychedelics. So like, for example, a testing lab, you know, in the cannabis industry and the mushroom industry, you know, they've got the medicine on hand, they're testing it, but they're not subject to 280E. I think it's similar. Attorneys will disagree and accountants will disagree with me, but first of all, you know, there's always going to be a little bit of risk in this industry. It is yet to be known what kind of risk there is. And personally, I don't think that there's a bulletproof way to bulletproof yourself from the, you know, enforcement of the IRS. I think that you as a facilitator or somebody who's providing, you know, harm reduction services essentially are low risk for audit and whatnot, let alone whether or not 280E applies to you. So yeah, in Oregon, for example, the facilitators don't take possession of it. They don't even administer it. So it's a clear open and shut case for those facilitators. In Colorado, it's a little bit different, but administering is not trafficking from my perspective. So as long as you're not buying and reselling that medicine, I think that you're in the clear.
Tasha, were you about to say something?
Oh, I was just gonna say, you know, the way Colorado's law is set up, anybody who actually handles the psilocybin requires a handler's license from the Department of Revenue, which is separate from their facilitator's license. And my understanding is that the facilitator does not need to physically hand the psilocybin to the participant, though that may be the structure that's set up at the healing center that they do, depending on, you know, what is the approach of the business. And so I'm wondering if there are implications there in terms of, like, does the facilitator have a handler's license, and are they using that handler's license to then hand medicine? Does that make any difference, or is that sort of just like another level of detail that probably doesn't need to be considered?
For clarification purposes, I think you had mentioned this earlier, Sakar, just to clarify, the facilitator is actually purchasing the psilocybin for administration. Is that correct statement? No.
No, they
So
wouldn't be.
this is essentially an individual coming in, evaluating a patient.
Yeah.
They are not purchasing the psilocybin or administering the psilocybin. Is
Right.
that
So
correct?
that would be let's say that's the most conservative case, right? I am coming into a healing center as a contractor, and the healing center is dispensing and handling the medicine, and I am providing mental health services for which I
Sure.
am trained and appropriately licensed.
My professional opinion, we might need some more details, is that 280E would not apply to you. I mean, trafficking in a controlled substance, no different than, from the criminal aspects of the law. I'm actually taking possession in essentially selling or providing, that Schedule 1 or 2 substance. So facilitators, in that capacity, the way that you've described it, it would be difficult for me if we had a group come in that were facilitators to entertain the conversation that we're going to disallow expenses, just really based on, the one sentence aspect of the 280E. But to
Right.
Justin's point, I'm sure there's professionals that would say that, if you walk by a facility, you're subject to 280E. And then we've seen that over time.
There are.
Right, right.
I know there are.
So I do want to
Yeah.
jump in quickly because there's a comment in the chat from an anonymous attendee saying in Colorado, some healing centers are having independent contract facilitators purchase the psilocybin, which I think speaks to the fact that there are a number of different models and approaches out there.
Right.
One of you be able to comment on the distinction there?
Is that allowed? Like, you might know this better. Like, is that allowed if they don't have a healing center license or a micro healing center license? Can
Yeah.
facilitators purchase medicine?
Yeah, so another
interesting.
piece of Colorado's law that's distinct from Oregon is that in addition to sessions taking place at licensed healing centers, they can also take place at a client's home if that client is eligible based on ADA, homebound, palliative care, or hospice. And then sessions additionally can take place at a licensed healthcare location that is not a licensed healing center, subject to those same conditions. And so for that reason, there is the ability in Colorado's law for a facilitator to purchase the psilocybin or the mushrooms directly from the cultivator and transport them for those sessions. Don't have the law and rules in front of me to say whether there's restrictions on that kind of purchase happening directly in the event that the facilitation is going to take place at a licensed healing center. But I think it's an interesting
Yeah, that doesn't sound like, from my perspective, that doesn't sound like that would be a common thing, because then it negates the point of having a healing center. If you have facilitators doing palliative care and just buying it and then dispensing it for whoever qualifies based on, and then is receiving revenue for the sale of mushrooms and facilitation costs.
So to be clear, those sessions that happen at home or at a licensed healthcare facility are still subject to all the same regulatory requirements around facilitation. And so we're still talking about supervised sessions with screening, prep, and integration. The distinction just being the location and creating an access model for people who can't physically or psychiatrically safely travel to a healing center. So it is not going to be typical necessarily, or kind of like the standard. I think most sessions in Colorado are still going to happen at licensed healing centers, but it has resulted in a law that allows for the direct purchase from facilitators.
Thanks. So one thing I want to do is maybe summarize some of this and then move on to the next thing, because I do want to stay focused on the tax implications here, if possible. But thank you for all of that information. So I think broadly, all three of us, but not everybody in the world, would agree that if you don't handle the psilocybin at all, it is highly unlikely that 280E applies to you as a facilitator. If you handle it, then there starts to be some possibility. So Justin used the word administer. He doesn't think that administration would make 280 apply to you. Other people might disagree, right? Now, if you're selling it, then there's probably another distinction there, which is what Jordan was alluding to earlier. So if you're a facilitator, it's probably important to think of, not just I'm a facilitator, but what is my relationship to the provision of the medicine or the traffic substance, depending on what language you want to use, right?
The only point I would add is the handling aspect. It's somewhat important, but it's really who's incurring the cost of the psilocybin. So as a facilitator, if I incur the cost, I go out to the wholesale market and incur that cost, I have already probably stepped into the world of being subject to 280E. So the way I see it is, if I'm purchasing the psilocybin for administration through therapy, I probably have met the definition. I'm not a legal expert, but met the definition of stepping into the world of trafficking. If I'm a facilitator that shows up to provide therapy and a different party provides that psilocybin or medicine, then most likely I'm not subject to 280E. So the handling part, that's the only part I wanted to clarify, because if I incurred the cost and I had, my friend handle it, that really would not work, to get around 280. So hopefully we're on the same page. I think we're
Great.
talking to the same point.
Yeah,
Thanks.
could I interject a little bit? Like, I
Sure.
think like the personal use model in Colorado versus the license model is kind of interesting too. Like it is allowed to gift the medicine. If I'm, please correct me if I'm wrong, but that people can gift medicine and also provide their services, but without selling the medicine. They're not allowed to sell the medicine. Is that correct? From the personal use?
Yeah. So it's correct that that it's illegal to sell psilocybin outside of the context of the state regulated program.
Yeah. But yet you are procuring it, you're growing it yourself, you're administering it, and then you're selling your services, which in this industry, in the psychedelic industry at large, seems, besides the people who are, selling who are on the black market selling psychedelics online and whatnot, they would be really selling their services only, and they're not technically allowed to sell the medicine. So that would be where it would be interesting to talk about whether or not 280 applies.
Justin, I'm so sorry to interrupt. I want to, we have a comment here from Sean McAllister.
Okay.
And the healing centers is what we should be discussing. And I know we're running out of time. And
okay.
that is where we have a lot of conversation to have. So there's a question on there that says churches. So I think in the beginning, we said this is about the state regulated model. There are a whole series of questions about religious exemptions, which we won't touch today. And then also, like Justin said, there's the personal use space, which we won't touch today as well, but it is a very interesting space, right? So let's jump into healing centers, right? I think the big question for healing centers is, now I have a physical location, so I have a considerable amount of overhead, right? I have to purchase, so going back to Jordan's earlier point, I have to purchase the psilocybin from a state regulated grower, right? And actually, I also have to sell the psilocybin, right? Whatever price I set, I'm required to do so. And then I also provide the therapeutic services, right? What we said earlier is we've seen that courts haven't necessarily been kind to people saying, oh, I have a management company that manages my healing center, right? Or things like that. But so let's say 280 applies to a healing center. I think there's no doubt in anybody's mind that we are now in that space, right? But having said that, does 280E apply to all services a healing center provides? Or how should healing centers be thinking about, where 280E applies and where it doesn't? And one thing I want to say is there may be disagreement here, even between the three of us, which I think is important for people to hear.
Well, we pointed out that there was like 26 court cases or something like that where the enforcement action was taken against cannabis businesses, and they were all bad. But the one good one that we were talking about earlier is California is helping alleviate medical problems, which is the one holdout for this industry, in which it was a nonprofit that was audited and stripped of its nonprofit status, but it was a group of doctors that were providing caregiving services, but then also provided cannabis for medical purposes. And at first 280 was applied completely, and they ended up going bankrupt. But they came back and they appealed and they fought in tax court, and the tax court did say that the deductions based on the services, or the expenses based on the services that they were providing, were deductible. And so I feel like that's a really, really great tool. There's other tools, but that tool in and of itself to protect the service side of the psychedelic industry it's good. So even in a one company model where you've got a healing center, both providing the medicine, selling the medicine, providing the space to conduct sessions and the facilitation, all but those expenses that are related to the sale of those medicines are non-deductible. From that perspective, the IRS may take a different perspective, but until we get to that point, that's the perspective I'm taking.
Okay, interesting. Jordan?
Yeah, we talked before the call started a little bit about CHAMP. Really, what we'd recommend to get to the point on a healing center, the way I see it is we have two trades or activity going on in the facility. One is providing therapeutic services, wellness services, and one is dispensing medicine or psilocybin. And what we've been recommending for groups that's starting off is not the complex legal structure of multiple businesses. We have one business, but really we need to think of that business in two activities. One is the healing activity. This is to springboard off of Justin. One is the traditional healing services, and one is dispensing medicine. One is subject to 280E, the services, or excuse me, the dispensing of medicine, and the services is not subject to 280E. And what you find with a healing center is predominantly the majority of the cost demographic is advertising to patients for healing center services. And the dispensing of medicine is typically a small aspect of that under the model here in Colorado. And if we were out there with a banner on the front of our healing services that says, buy 100 milligrams for $10, and we'll give you 5 minutes of advice before you administer that medicine, that'd be a different model. That'd be a true dispensary type of model. But most of the healing centers that I'm familiar with, and there's not a lot right now, it's somewhat of a new industry, is that we're promoting wellness, healing, education, hopefully relief around, mental illness at some aspect. And as part of that, we're administering medicine. And so what we see is when we think of a cost demographic that may be 7 figures, we might have employees, we might have doctors, we might have advertising, marketing, promotion, which is kind of truly the category of non-deductible expenses. As long as we fashion our financials to support that and we don't commingle these activities, we usually don't see a bad tax result at the end of the day. Because at the end of the day, all of our expenses are around the services, and we need to be careful to bill our clients, patients around that model that you're paying for the services. The cost of psilocybin may be at cost, maybe at a small margin, whatever it may be, but we're not incurring most of our cost demographic to dispense psilocybin. We're actually incurring most of our cost demographics to provide that service. And that's what we recommend. Not complex legal structures, one set of financials, one business. Sometimes it makes sense to have two. That's a different conversation, but we're really sitting down and accounting for these costs and departments so they're not commingled when it's time to do the tax return. 280E does apply, but it's not going to apply in the same manner if we have these things commingled. So that's what I would add.
I have to agree with Jordan on that. That is something that the attorneys, when in Oregon specifically, when they started to enter into the industry, this bifurcated model of having two businesses was pushed and is still being pushed. And it's fine if, again, it's risk versus complexity. You want higher cost, higher complexity, you'll get lower risk, and vice versa. Us as accountants, I think, have a better understanding of what their risks really are because we deal with the IRS all the time, you know, in that way. But the keep it simple model is something that I'm coming out of now, having a couple of years of working with these service centers in Oregon, that it's better that way. And I'll tell you really quick why, is because the mushroom company on its own does not make money. It's very low revenue producing, and it can't support its own costs. So then those companies will pull money out of the facilitation company and inject it into the mushroom company. And that's then like, it undermines the integrity of the separation, because now you're commingling and same ownership, all that stuff. And then let's not forget the service healing center, the service center rooms, and providing rooms for these sessions. You can actually charge rent to have facilitators come in to do sessions, you know, those types of things. So that's another service offering that wouldn't necessarily also be subject to 280E.
Yeah.
Right. The financial reporting is the most of understanding the financials and getting those correct by the time you get to the tax time.
So to make that point maybe a little bit more like, you know, direct and practical, Jordan, are you saying things like, you know, I have two trades or activities, right? I have a business that sells natural medicine, and I have a business that provides therapy, and I have them in the same space, right? And so consequently, what I have to think about is, well, how is my rent allocated between these two businesses?
Exactly.
How are my utilities allocated between these two businesses? How is the time of the person at the front desk allocated between these two businesses, right? And that's what you mean by the financial statements being correct. Because for me to say, oh, this mushroom selling business, this natural medicine selling business lives in the same space, but actually it doesn't pay any rent, that probably starts to look a bit shifty, because what business doesn't have to pay rent for the space it occupies?
Right. In under this model, we don't have, in a healing center, we don't have two legally, we may have multiple licenses, but we really have one business. And I think we're speaking to the same point. So if we had $1 million worth of labor costs, you know, at the end of the year, what we would recommend is, if all of that labor has to do with therapy services, that's on the service side of the column.
Right.
If we had somebody that was doing, you know, inventory, warehousing, management, reporting, that would be on, you know, really the psilocybin side, really kind of the of the column. So I think we're speaking to the same point.
Great. So it sounds like there's actually quite a bit of agreement between the two of you, and I am also in agreement with you too. There was a question about cultivation, but I think
Can I point out one more thing? I'm so sorry. Like, what I'm finding with talking to people with micro tiers, though, is they might just have an office and a safe in their office that they do the therapeutic work. How much rent is that? You know, how much rent should a company that has a safe in a room be paying for that? You know what I mean? So yeah. Okay, that was just a funny.
Yeah, it's a good point. So really quickly, there was a question about cultivation, but I don't think we'll have time to go into cultivation today. If you're a cultivator, you know, here are these two very experienced CPAs. You can reach out to them. But so we're saying, okay, it's probably possible to bifurcate your healing center into one to which 280 applies very strongly and the other service business, right? What if we are wrong? So just to help people understand the risk that they carry, right? What if we are wrong? What if the IRS or a tax court or, you know, appellate court decides that actually no, the whole thing 280 applies to? What are the consequences of that to the business owner?
So typically what happens is you get an examination letter, examiner will come do a site visit, and most of the time the exams are being done on years, you know, 2-3 years later at, you know, probably at a maximum. And if they disagree, and where we find trouble with the model that we're actually discussing is someone says, I'm predominantly a service center, but in reality, they're a dispensary. So those things do happen. We get representations when we do tax work. But really what happens is you go through a process, an examination process. Examiner, let's assume that's the assumption, they disagree with what was represented on the tax return service. Maybe they feel like it should be swung the other way, 90-10. Maybe they think it's 90% dispensary, 10% services. They're going to disallow the deductions. It would be great to think that the taxpayer representative stand at podiums and they throw out IRC or tax code, and the examiner comes back and someone says, well, you're right, you're wrong, but they just disallow the expenses. So you end up with an assessment notice of deficiency. And then what's going to happen is you're going to have the ability to appeals that, if we're going in the right area, appeal that deficiency. We're going to owe the tax for those deductions that were taken, that were disallowed. We're going to owe the calculated tax, whether we're incorporated or we're a pass-through business. And we're going to owe the tax plus interest plus penalties. And it's important to understand that penalties are typically encompass accuracy-related or substantial underpayment, and potentially preparer-based penalties, depending on, kind of during this process that happened during the exam, if they think the practitioner was responsible, or if they think the taxpayer was responsible. But you're going to end up at appeals. We always recommend that people get a second opinion after exam to go down to appeals. Typically, it starts to feel more like a negotiation, hazards of litigation. We would fund 2/3 of what the government would like for tax in exchange for settlement. Some cases, especially the ones in the early days, don't end at appeals. So you end up petitioning federal tax court to get really what I consider to be the third opinion. And really the ultimate impact that we saw in the cannabis industry is you make arguments, it's great, you'll get a lot of opinions, people will tell you you're absolutely right, they're charging you the whole way along the way, so you're going to owe the tax, interest, penalties, plus if you're going to end up at federal tax court for a case that may have to be appeals, you can probably add another $500,000 to $1 million on top of all the costs. So the ultimate impact, if you're wrong, is you can pay the tax after the exam and move on. Sometimes there's a cost benefit to doing that, or you can go through the litigation and due process and incur a lot more money on top of the tax owed. So it's really that.
Okay.
Nobody goes to jail.
Yeah.
Or
Justin.
you can elect to be taxed as a C corp.
Yeah.
They're like, you know what, these guys, Jordan and Justin, are complete wackos. They don't know what they're talking about. 280 all the way. And then you walk away from it because it stays in the corporation. Or you negotiate with them and you're like, okay, well, we're going to amend our returns later on when you bozos get done doing what you're doing with Schedule 1 and all that. And then you negotiate with them, but you still get paid at the C Corp level, because the C Corp, everything's contained there. It pays its own taxes, and it has to negotiate with you, with the company. You are still an officer, you're still getting paid, and then whatever is left over, that's what the IRS gets, right? That's what the IRS gets to take. And oftentimes, and I've seen this, we've probably, Jordan, you too, hundreds of times of dispensaries particularly being buried in tax debt. And oftentimes the IRS is like, okay, I see that, 280E, whatever, you owe a ton of tax that you can't pay. We're going to put you in currently non-collectible. So that means like they're not even going to try to collect from you for years. And then hopefully by that time, it didn't happen for the cannabis industry, but hopefully for the psilocybin industry, it'll get rescheduled relatively soon from Schedule 1 to Schedule 3. There's already movements towards that. 280 won't apply. We'll amend your returns to then, to offset those lost deductions.
Right.
The C Corp, I think for healing centers and service centers, the C Corp is the way to go in terms of entity. And that's going to really help you mitigate that worst case situation, so you don't have to do all that appeals and tax court stuff.
So in summary, if the advice that you're getting here today or from your CPA is wrong, and someone decides it's incorrect or that's not how it should be, then the risk that you're really carrying is that you're going to get a big tax bill, right? Okay.
Yeah, right.
And what I think Justin was saying is who gets that tax bill is one of the things you can control. Because if you are a LLC or a S corporation, or if you're structured as a pass-through, that tax bill comes back to you personally. But there is a way to work with that and structure yourself so that the tax bill stays within the company. of course, there are other consequences to being a C corporation that you should consult one of these two gentlemen or some other CPA about, right? But broadly, that is the big risk that you're carrying here, right? And I think on that note, we really are at the end of time. If Justin, Jordan, if you have a few more minutes, I think maybe we should open up to questions if there are any, right? And for all of you attended, thank you so much. We appreciate the comments and the questions. And if you have a few more minutes to stay around and ask questions, you can.
So Sakar, I actually unfortunately do have to run to another engagement, but I just made you the host. I do want to give folks the opportunity to ask some questions with the three of you who are the experts here. So thank you so much, and I'm going to have to hop off.
And how will people ask questions? Will they just be on that chat, or can they actually come on and ask questions at
It's
this
all
point?
in the Q&A. Yeah.
Okay,
Yeah,
that's
there's
all in the Q&A.
I click that button and then I can see Kyle, Travis, Rose, Ember, and Jesse. Oh, Jesse.
Okay.
Yeah.
Yeah, I've been looking at that too. So it looks like we
Okay.
answered a lot
Go
of
for it.
questions. Yeah, okay. So we have a question about nonprofits, which maybe is a bit difficult to tackle today. That's getting into complex territory that might require another hour. Sorry about that.
Yeah.
So there's a question about being a retreat organizer. If you are selling a retreat here but doing it outside the US, right? Or what are there 280E issues, implications with that?
Jordan, do you have any experience with this? I have done a little research on it. I don't currently have many retreat centers that are doing like ayahuasca, those types of things. The research that I have conducted, though, does show that even if you're a US-based company selling the medicine, or even marketing the medicine, you are subject to 280. So you have to be very careful about that in terms of like how much exposure you're taking there.
Yeah, from our perspective, we would evaluate it, really, what are we actually selling? Are we selling ayahuasca, or are we selling an experience to go down to South America and go through an experience? I mean, we know in certain parts of the world, they've if I booked a trip over to certain parts of Europe, Amsterdam used to be kind of the big one. Would a travel agency be subject to 280E because, they mentioned that, Schedule 1 and 2 substances were readily available to the public. From my perspective, I would not think somebody that was, partaking in this business would be subject to 280E. If you caught the eye of, a federal examiner, maybe they would disagree with you, but I think that the transactions would have to be facilitated in lieu of consideration, from my professional perspective, and I'm not an attorney, in order to be subject to 280E by selling experiences.
Yeah, I agree. Most of them are done by medicine, like administered by medicine men and whatnot in like, say, Mexico and whatnot. And that would be a little bit different. But if you're also the company that is taking the money for the medicine, then and you're marketing that in the US, you have to be careful with that. That's specifically. And
right.
I'm not too much of a stickler. It's up to the taxpayer what type of risk they want to take, but that's technically what I probably would have to advise.
Right. I would have to see their marketing material on website. We might be talking to one specific guest here, but
send us your website. Okay, so there's a question there that says, for the C Corp protection, you can elect to be taxed as a C Corp. You can still be LLC, correct? I think the answer to that is correct.
Yeah, so that's a really good, that's a good point for the facilitators in the room and whatnot, who are just independent contractors and whatnot. Get the LLC, or even the service centers and the healing centers. Get the LLC, get the EIN number, get the bank account, get bookkeeping going, and then you can elect it. And then Jordan or I could file the form to elect you to be taxed as a C corporation. And you can even do it retroactively as long as you've been conducting your business as if you're a C corporation, which means don't take money out of the business as draws, pay yourself through payroll, or if you've injected money in the business, you can take it out as a repayment of loan. Otherwise, if you're gonna get paid, you pay it through the payroll system only. You don't take draws. That's how a corporation has to do it.
Great. There's one. So before I ask you the last question, I think we're not getting too many more questions, so we can think about ending this. There's a question that says, and I'm going to answer this. When banks are going to open up in Colorado to psilocybin businesses, please email me or the Healing Advocacy Fund. We would love to have some conversations with banks in the background. But I don't think there's any kind of timeline. I think banks are federally regulated and they're going to, they have some federal regulations involved, and so they're going to be cautious. The last question I have for both of you guys, Jordan, Justin, is if anyone on this call or watching a recording later wanted to reach out to you, how should they do so?
Yeah, I mean, for me, just go to our website, Calyx, CPACALYXCPA.com, and you'll be able to get our office phone number. You'll talk to my guy Nick. He'll get some preliminary information and set up an appointment for you.
Great. And Jordan?
The same way. We're local to Denver, Colorado. You can Google us. It's Cornelius CPAs. You can reach out. Our office manager yields all the calls. She gets the intakes and then essentially establishes an appointment with either myself or my partner. So
great. We have a note there about the banking from the National Psychedelics Association saying they do have banking partners. So whoever was asking that question, you could reach out to them as well. But great. So now you guys have ways to reach out to Jordan or Justin if you want to discuss more of your natural medicine business and 280E. And I'll end with my own pitch. I work with a lot of nonprofits. So if you have nonprofits that are working in this space and need some support or advice around that, you can reach out to me. My firm is called Bean Count. So, and my email is Sakar, SAKAR, @beancount.co. So with that, thank you very much to Justin Botillier. I think I got it. Justin Botillier and Jordan Cornelius from Calyx CPA and Cornelius CPA, respectively. Wonderful conversation, guys. Thank you so much for your time and your knowledge. And thanks to all participants. All right.
Thank you.
thank you, guys.
Thanks, Sakar.
Bye.